Hi, today I'm going to show you another tutorial of the 2017 exam in the TCE Accounting exam series looking at a cash flow statement. So this is question 7 of the 2017 exam, where for the first time in many years you had to produce a cash flow statement rather than a turbot one. Remember that in the exam specs in question 7 you either have to produce a cash budget or you have to produce or create a cash flow statement. So here's the question. It's been given to you in summary form rather than providing two financial statements, which you may be familiar with. Right? So he's giving you bits and pieces of information, and you have to identify in which section of the cash flow statement it goes. So what I've got here ready to do my question, a number of things. There's obviously my cash flow statement that I'm going to show you how to fill that in. You can see that there's three sections: operating activities, in and outflows. There's investing activities, in and outflows, and financing activity, in and out. And then we're going to get the final balance here. And once we get the final balance there, we'll know we've done it correctly. The other important thing that we need to also consider doing, and I suggest that if it's asked for a formula, obviously you have to do this in a account like this, or on a scrap piece of paper, because in both these instances we have to find out some other cash items, and I'll show you that in a moment. And there's information on this particular question. So what I might do is to post these items here onto the cash flow statement, and then I'll give you guidance about how to use these and to generate other cash items from the inventory account, which is from here, and the capital account there. So let's get started. So proceeds of the sale of a motor vehicle. Motor vehicle is relating to a non-current asset, which is a investment activity. So that is investment activity coming in. So let me go to here. So it's investment coming in. Going the wrong way. There it is. So investment. So in motor vehicle. And that's money coming in for $16,500. So in relation to my exam paper, what I would do is to cross it off to say that I've done it. Payments to employees, that's an operational item, 82,000. So that's an outflow in operations. So that's wages or payment to employees. It doesn't really matter what you put down there as long as you have the right amount. There's 82,000. So I've got that item ticked off. And again, you can see I'm being methodical just in case I miss something. Other operating revenues, so there's a dead giveaway. It's commission revenue. That's money coming in for $1,200. I'll tick that off straight away. Inflow, I might just put it down here because I've got some other inflows coming up. So that's commission revenue of $1,200. So I've got that. Proceeds from a bank loan received. So obviously we got a bank loan from the bank, and it's $40,000 inflow to our business, and that is $40,000 in the inflow of the financing section. So put that in, 40,000. So I've done that. Interest paid on loan. Now, don't get confused that it's something relating to the loan and financing, but that's the actual interest charge. It's not getting the loan in the first place or paying that loan back, which would be a financing element, but this is interest. It's an expense, and therefore it goes in the operations section, $2,300. So let's just put that in the outflows here of 2,300. So I've got that sorted. Investment in shares. Again, that's a bit of a giveaway. We've invested in some shares, $30,000. That's money going out. So it's an outflow in investment. So let's put that in. So invest. So that's shares, 30,000. So we've got that. Payment for new motor vehicle. So there's another outflow, but this time it's relating to a non-current asset. Therefore, it goes to the investment section. So that's $42,000 we're going to put into the outflows of this part. 42. So we're almost getting there. Cash receipts from customers. So that's our sales. That's an operational matter, part of normal operations. So let's put that in. 384. I'm just going to call it sales. You can call it cash from operations. It doesn't really matter. I'm just summarising it a bit. Interest received on term deposits. So that's money coming in. It's part of our operations. You might think, well, okay, it's from an investment that we've made. There, that's true. But when we take out investment, or when first we'll pay for it, there's an out, and if we then get our money back from investment, it's money coming back in. Right? So $280 here is part of our operational aspects, and I'll give you some other clues about that once I put this in. So that's interest revenue of $280. I think it was. Yep, that's right. Let me just make a clarification here. So any item relating to that you would put in the income statement goes in operations. Any item that you see in the non-current assets section of the balance sheet goes in investing activities, and any items in the liability section or the owner's equity section goes in financing. So that's another way of checking to make sure that you don't get confused with some of these items up here. Other operating expenses, that's again a bit of a giveaway. That should be in operations, 73.6. That's up here. Operating expenses, 73.6. So what I've now done, I have got rid of all these. You can see by being methodical, ticking them off or crossing them out, doesn't really matter. I've now dealt with those. Now I've got a number of more difficult things to deal with. So let me deal with the first one first, and that is looking at the capital account. Now what we need to do here is to work out whether indeed there have been any drawings, or if there's any net capital being introduced. But you have got some information here. You have to determine the owner's drawings, and they say that no new capital was introduced for the period. Sometimes you may see that drawings are up in here. You still have to do this account to reconcile to see whether there's any capital being introduced. So be careful about that if you get a question on it. Alright, so let's put some of these things into the account. So $30,000 is the opening balance of the, here it is, $30,000. So the opening capital account, $30,000. Now you need to recognise that it's a credit balance. That's I guess a bit of a trick here, but you should know by now that any balance in the capital account, 99.9% of the time, is always in credit. So that's, we've got that bit sorted. So I've got that. Again, I'm being methodical and crossing these off. The balance at the end is 34.8, and the net profit for the period is 12.8. So let me put the net profit in. Okay, so the net profit, And net profit increases owner's equity, so it's 12.8 on that side. So I'm going to take that away. And the other item that we need to find is drawings. Now we don't know what that is yet because we have to calculate that using this account. So let's just update after we put the profit in. $30,000 plus the 12,800 is going to equal 42,800. Whoops, didn't put it in the right spot. 42,800. That's credit. Now, drawings is going to reduce that down to the final balance. Let's check what the final balance is. The final balance, they've said, is 34.8. I'm going to put that in here, so we know that the final balance is $34,800. So you've got to ask yourself what debit, right, because it actually went down. So it went from 42.8 to 34.8. So how did that occur? Well, it must be that drawings is 8,000. Right, let's do some maths. 42,800 credit and $8,000 debit is going to bring the final balance down to 34.8. So there you have it. So the missing link here is the drawings of 8,000. So that was conducted in cash. So therefore, in the I beg your pardon, I'm in the wrong spot now. In our cash flow statement, a financing outflow is drawings. Of 8,000. So that was important that we did that. So we've dealt with the capital and identified the drawings. Now, the one other thing we must do is to work out what our cash purchases were. So we've got the opening inventory, we've got closing, and we've got the cost of goods sold. So when we sell goods, we reduce our inventory, and what we must find out is the amount of inventories that we purchased, and see here that all inventories were made in cash and no GST applies, to simplify our example here. So we've got to determine the cash payments to suppliers of inventory. So how do we do that? So let's put in the balance of the inventory account at the beginning. So I'm going to go to my inventory account. There it is there. The opening balance was 10,000, and I'm assuming that you are in the knowledge that it should be a debit balance. We've got a cost of goods sold figure given. That's going to be a credit to the inventory account. I was checking to see what it was. It was 190,000, so let's put that in. 190. So that goes over here. Right. So in actual fact, what's happened here, we've got now $180,000 credit. Right. So debit of 10 minus 190 of credit, so we've got 180 of credit sitting there. The item that we're looking for is cash for purchases of inventories. So now we need to find what that debit amount is, and I need to have what the final balance is of the inventory account. So let's just check that. It's $18,000. So let me put that in. The final account here is $18,000 in debit. Right. So how much debit on this side do I need to turn this account from $180,000 credit into an $18,000 debit? And the answer is you must put both of those add both those together. Right, and there it is. So let's just check that. $180,000 credit and $198,000 debit leaves an $18,000 debit. So that's how you would work it out. So now that I've worked out what my cash for purchase of inventories is, $198,000, I must transfer that into my cash flow statement, and there it is there. So cash payment is an outflow, 198. So now what I'm going to do, I'm going to pause while I'm doing all my adding up for each one of these sections, all the ins and outflows for the three sections of the cash flow statement. Back in a moment. Okay, I'm back. I've done some calculations. So you can see my total inflows here. Calculating all those together is 385, 480. From that I have to take away my outflows, which consisted of these things. So my net cash provided used in operating activities is the difference of those two figures. So that minus that gives me that. Similarly, in my investing activities, I had 16.5 in and 72 out. So what we do in accounting is to indicate minus figures with brackets around them. That's why this figure here, that minus that gives us a minus 55.5, so an outflow, but we recognise that with brackets. That means that it's a minus. And over here we had a positive $32,000. So what we've got to do, we've got to now add up the net decrease or increase in cash held, and we do that by adding up the 32 plus 35, or the 55 and the 29. So that minus that plus that gives us 6,080. The cash at the beginning of the reporting period that was given to us, so let's have a look for that. This information is given to you at the start of the question there. It's 51.7, so that's at the start. So let's put that in, 51.7. So what we've got to do now is to add both of those together, and that will be the final balance, which is $57,780. So there you have it. Normally, in another type of question, if you were provided with the balance sheet and the income statement, in the balance sheet you would look at the final cash balance of $57,780, because what you get in the balance sheet is the opening balance and the closing balance. So if that then reconciles, you know you've done it correctly, and if not, then you have done a mistake in your cash flow statement. But in this particular question, you don't have that luxury because you are given summarised information from both statements. Hopefully that's been useful to you, and good luck with your exam. Thanks for listening.